Good evening. This is Ken Long from Tortoise Capital Management with the daily market commentary for December 13th, 2010. We're in bull quiet mode on an annual basis. We're still at the high range of normal at 67. With 91 on the 10-day index, we are still in overbought conditions. I made a slight change and moved the indicators up and the min pain and max pain symbols down so they're closer together. Hopefully it makes it a little easier to read. We're still bullish on the 200-day percent stretch and the slope of the 50-day moving average. ADX moved up just above 20 today. And ATR percentage remains quiet at 1.09%. No patterns come out of the gap statistic. The standard deviation still remains 0.74%. So about 0.75% of a gap in either direction is still within the range of normal. No signals in overreaction or channeling. Pivot point remains above support, which was at 123. It's now at 124.76. You can see that volatility is declining and is well under the red line for symbolizing quiet. You can see ADX is ratcheting up in an extremely powerful move here in plus DI. On the 10-day max pain, we're looking at, McDonald's, Hewlett-Packard, Boeing, Bank of America, and Intel. Among the ETFs, Brazil, gold miners are of interest. On the min pain, strength in the usual suspects here: Coca-Cola, Pepsi, Merck, Heinz, Travelers, ExxonMobil, Home Depot. The defensive sectors today of, utilities and pharmaceuticals did well. EWY is South Korea, still maybe a leading contender among the Asia less Pacific. There was a good strong move today in emerging markets in Asia less Japan. So maybe those sectors are starting to recover from their sell-off. On the pattern trading, there was a number of 551Ws. You can see the symbols here. None of them except EP at El Paso Energies. That's the only one that I've traded before, but there are some possibilities in there. Stealth traded. Just want to highlight the natural gas and financials are still showing some strength on a quality basis compared to their peers. In the tactical summary report, today's winners: Merck, Chevron, Caterpillar, and Disney today, and 3M. Today's losers: Hewlett-Packard. Hewlett-Packard is one I'm going to stalk carefully. It's at 7 on the 10-day index, meaning that it's oversold. And it is also a 3-day and a 10-day max pain, combining that with a 1-day sell-off today, and that may be a stock that has bottomed out, particularly in light of the NASDAQ sold off today. That today was a percent loser. Still, more of the market is over bought than oversold right now. You can see the leading candidates in that area for continuation of positive momentum would be Caterpillar, Chevron, and Merck, and Disney. Silver came back to its winning ways today and turned in a pretty powerful performance. In the Dow, we still have quite a number of symbols that are on a doji status. I would highlight McDonald's is in a channeling pattern and is still the number one max pain range compression candidate. Caterpillar, you can see its strength here in just about every time frame. Chevron is beginning to gain momentum, and I would say Merck has some near term. Now you can see how much Hewlett-Packard has been lagging, along with Intel. So those would be two that I would expect to see starting to position themselves as value plays here. If we start seeing strength in the NASDAQ, I think those two will come around. So Intel and Hewlett Packard goes onto the back burner for longer-term watch list. On the ETFs, half a dozen dojis today. Gold still remains max pain range compression as does U.S. real estate. You can see the strength that has come back into silver today. And consumer discretionary still suffering. I think we saw a little more positive action in what were the defensive sectors that we saw yesterday. Over the weekend were bad. Utilities, healthcare, and consumer staples all had positive days today. Slope of the regression line remains positive. It's still above its 10-day moving average and sloping up. No resistance overhead when we look at price action. The percent stretch, it's above the 200-day moving average, is right at one standard deviation, or 10% right now, above the average of the last 180 days. 3M looks interesting to me, as does Merck. These were both that were horrible on the 2-month ago quality, but are starting to recover, and so I would be putting them on my short list for continued strength tomorrow. In the ETF quality report, I think agriculture, the strength in agriculture today is of interest to me. Looking at the elder safe zone concept, Cliffs Natural Resources is the only one that showed a positive increase in the strength of trend to the north. So that went along with today's strength in commodities. So that would be one that's on the short list again tomorrow. And that's the daily market commentary for 13 December. Again, I'm going to be looking to play primarily silver, commodities, financials, and natural resources again tomorrow. I'm careful about silver. I don't want to have too big of a position overnight because of the volatility, but it's been offering some rewards intraday. So good hunting tomorrow, and we'll see you on the high ground.